the largest independent municipal advisory firm in the country with 30 offices nationwide, and I lead our Seattle office. In the state of Washington, we work with over 60 clients, really public entities, including 17 cities. The firm was founded over 45 years ago, and with really the objective of providing sound and financial advice to governmental and non-for-profit agencies, really focusing on that municipal sector. We had the pleasure to work with Finance Director Patricia Soul at the City of Oak Harbor previously. There we actually worked together on a financing for a wastewater treatment facility, and the city issued $25 million of utility revenue bonds back then. I'm here to really talk about the city's debt capacity, a bit about why cities typically use debt for certain larger capital projects. And I'll walk through those slides. If you like to ask questions along the way, that would work very well, or you can wait and I'll make sure to answer questions at the end. Going here to that first page, make sure you can see this. So we understand that an outside consultant discussed a hypothetical 6-year capital plan with City Council. This plan included a list of over 70 projects with a total estimated cost of over $300 million. So a number of these larger projects are listed here on the left. Hope you can see this all. Again, please let me know if I need to enlarge anything, make it bigger. As you can see, if you look at the purposes, those are primarily for public safety, tourism, transportation, and large amounts for flood control. While these projects haven't been approved by the council, they're just, really a list, perhaps a wish list of projects. We thought it might be helpful for you to see, the size of other cities with perhaps similar size and population. So we have provided here a little table to the right of cities that readily provide the adopted 6-year capital plan on their website, and you see here really the comparison that the $300 million figure is certainly larger than many of your peers, and that have perhaps a similar size and population. And one may argue some of them may have a larger tax and customer base even. Now, as you know, the key to a successful capital plan is a robust funding plan. And funding sources are typically distinguished between sources the city can control, and such as existing reserves, right, or really existing revenues that you could reallocate to those capital projects. You can generate new revenues via additional taxes or higher taxes, or increasing existing rates and charges. And then on the other hand, you have sources for these projects that are outside of your control, particularly federal or state funding, or even philanthropic dollars if you receive gifts for any of these projects. The majority of this hypothetical plan is actually dependent on state and federal funding. So clearly, if you were to receive those funds, it is, it allows you to move forward with those projects. Some of the projects, though, that are listed here are for police, fire, there's a gateway center, and museum projects that will generally depend on city resources. So on the next slide, I'll focus a bit on the city's resources. So as you know, the city adopts a budget every year, a balanced budget. So it means that you're really allocating your revenues to fund the existing services, the services that the city currently provides to citizens, as well as to fund some minor capital projects. So in order to use these existing revenues for the capital projects, for any of the capital projects we saw earlier, you would generally have to reallocate funds from existing purposes to those purposes. Or which in the current environment might be additionally, more difficult since really higher inflation has resulted in increased costs of supplies, increased costs of labor. So you already are, requiring to use some of the most of your funds for existing services. So just want to make that point here. We thought it was also helpful to summarize the available cash and investments of the city. You'll see here that the city has currently about $23 million available. That's inclusive of the $18 million from the insurance settlement. But it's important to note that, as you see here, that $16.5 million of that insurance proceeds have already been committed for projects. So that leaves only about $1.5 million of these available reserves for projects to undertake.